Good one. Rising extreme weather events are destabilizing the insurance industry, and because of which it is driving up the premium prices and also pushing out insurers from the high risk market. So, why is this happening? What exactly is happening to extreme weather event? What has changed right now that the insurance landscape is being altered because of the extreme weathers? So, for that, I welcome both of you, Shagun and Akshit. Thank you so much for joining. They have in detail worked on the story on insurance and how it is extreme weather effect events are impacting the insurance industry. So let's start. Akshit, I'll start with you. Can you explain in very basic terms what is the connection between global warming, climate change, the impact, and the insurance sector? And if you could also give us an example of what is currently happening in the insurance sector and how extreme weather events is impacting it.
Yeah, sure. So basically, we know that the warming from greenhouse gases has increased, is accelerating right now, as we know. 2024 was the warmest year on record. It was also the first year when the 1.5 degree Celsius threshold of the Paris Agreement, annually at least, was crossed for the first time. So we definitely know that warming is happening. And this warming is also accelerating, most probably, especially in the oceans. Now, due to that, extreme weather events are increasing. For instance, tropical cyclones, hurricanes, flooding, uh, there are heat waves. All of these are increasing every day. Wildfires are also increasing. The rate is increasing. Their intensity is increasing. So, because of that, the risk to people's property, to people's livelihoods. For instance, agriculture, their livestock. In the case of animal husbandry, the risks to these properties and livelihoods are increasing. And what do people do when the risk increases? They decrease the risk by buying insurance, right? So that is happening everywhere in the world, but in the US especially, property insurance for property has a lot of penetration. Like they do buy insurance when they buy houses, right? And in certain regions in the US, there is uh, uh, like property house insurance has is now not able to cope with the extreme weather events that are happening. For instance, say in California, recently there were a lot of wildfires. The Los Angeles city lost a lot of houses to wildfires. And these wildfires are not just happening now in California, they have been happening for a while. And the risk has increased so much that the insurance industry is not able to cope with it. There's only two ways to decrease risk for the insurance industry. Either they increase the premium prices, or they move out of the regions where the risk is too high. And the risk is now so high that the events which were likely to happen have become all likely to happen. Like they're definitely going to happen. Now, how do you insure for that? So that is why certain regions in the US and across the world are becoming uninsurable. And that is why we did this cover story on climate and its relationship with insurance. Now, what is happening in California is also happening in other states in the US. Around 18 states, insurance companies are not either providing policies for home buyers, or have increased the premium prices. So, due to that, what is happening is those property buyers, they have to go to other insurers, which are state insurers. State government also has certain plans, such as fair plans. They're called fair plans, where the state itself gives insurance to these buyers. Now, because they are taking up most of the insurance burden, they have huge debt, and soon they won't be able to pay out those debts. They won't be able to pay out the claims. And that is why increasingly, as the frequency and intensity of these extreme weather events increases, these insurance companies are going to collapse. The entire industry might collapse. There are experts who have also said that it would have knock-on effects on other economies around the world, similar to the housing crisis that happened in the US. Because whatever happens in the US doesn't stay in the US. It affects all economies everywhere in the world. We have seen that before. So yeah, so that is how the global warming, climate change, extreme weather events are all linked to the insurance industry, and there is a crisis that's happening there.
So, if the traditional insurance models are failing, what kind of alternative or innovative solutions is the sector exploring to stay afloat?
So there are a few. For instance, there is something called parametric insurance solutions that are being explored, and then there are index-based insurance solutions that are also being explored. I'll explain these through some examples. For instance, the Caribbean Risk Insurance Facility in the Caribbean region basically has around 30 members, and it's like a consortium of countries, and it to decrease the risk from extreme weather events. These countries suffer from hurricanes, flooding. Also, they suffer from heat. Now, the heat also is increasing in those countries. So, from all those events, they have to decrease the risk. So, what they have done is instead of doing traditional insurance, uh, because that would increase the debt and the burden and all of that, they have gone to parametric insurance. In fact, Caribbean Risk Insurance Facility was the first to introduce this concept in the late 90s, early 2000s. They started doing this. And in that, they basically define a trigger for each of these events. For instance, for hurricanes, it's usually the peak wind speed of that particular hurricane, of a tropical cyclone. And for floods, say it is the level of flooding that has happened, storm surge, flooding, the level of flooding that has happened. For instance, extreme rainfall, the trigger is the amount of rainfall that has happened.
130 millimeter.
Yeah, something like that, like 250 millimeter in a day. Okay. Something like that. So whenever these triggers happen, the threshold crosses, immediately a certain amount is paid out to the, whether it is a energy facility, whether it is a farmer, anybody, whoever is buying that insurance policy, the parametric insurance policy. So what they have done is the traditional insurance, they have put to rest the whole assessment part of the traditional insurance, which basically takes up a lot of resources, right? So in this, and also they have decreased the uncertainty. They have decreased the uncertainty. They know that this gets triggered, and they have to pay out. So their uncertainty for the insurance companies has also decreased. And then there is also something called index-based insurance policies, where they look at historical data, satellite data, and see which regions are, say, very at high risk for hurricanes or floods or heat waves. And based on that index, they provide support in before the flood happens, because they know that most probably the flood will happen. For instance, the International Water Management Institute, which is based in Colombo, they have done this experiment, pilot experiment in Zambia and even Bihar in India, where they're working with farmers and they just don't give them money. They also support them with, say, flood-resistant seeds. So it's called bundled insurance, where they also give them other kinds of support so that they are well prepared even before the flood happens. Right. Bihar is extremely prone to floods. This region in Zambia is also extremely prone to floods. So those regions, index-based insurance has worked, but it has only worked in the pilot scale. And I think also India, there's other examples.
So, Shagun, let me rope you in now. Yeah. So, has India explored parametric insurance so far?
Yeah, actually, parametric insurance in India has been gaining a lot of traction in the last, say, 2 to 3 years that we've explored in this story also. Different organizations are experimenting now. Last year, we saw a couple of pilot projects where grassroots organizations were experimenting with parametric insurance, especially in the context of ensuring informal workers against extreme heat. So, in this story, we talked about 3 such experiments. They were in the states of Gujarat, Rajasthan, and Maharashtra. The idea behind this was to put money in the hands of the most vulnerable communities, the most vulnerable sections, in the most crucial of times. So, crucial time. For example, if we talk about extreme heat, so most of the informal workers, they work outside or they work directly under the sun, and when the temperature rises to an extreme level, then there is a loss of income. Either they are not able to, either they miss the work, or they're not able to be that productive that they are, in other rest of the months. So one is loss of income, and the other is a rise in their expenditure. Because they have to buy more cool drinks to stay hydrated, or there are heat related illnesses. So then there is expenditure on electricity. So during that time, when of course, their expenditure rises and there is a loss of income, so putting money in the hands of those people at that time, that is how parametric insurance, that is the role that parametric insurance is playing, and that is how the grassroots organizations currently are experimenting. We talked about one such insurance program elaborately in the story. In the summer of 2024, this was a pilot project that was started by Mahila Housing Trust, and that was for informal women workers. And what they did was these women were insured for a period of for a period of 4 months, March to June, the extreme heat months, and this was in Gujarat. And three cities in Gujarat were covered: Ahmedabad, Surat, and Vadodara. So they had to pay a one-time premium of rupees 354, and the maximum coverage amount was 2,000. The temperature thresholds, as Akshit also explained, in this case they were divided into two categories. So one was a higher level trigger, and the other was the lower level. So if the lower temperature is triggered, last year they got rupees 750, and if the higher temperature limit is triggered, they got rupees 1250. So the maximum amount they'll get is 2,000. And one-time payment was one-time payment. This was a one-time payment, sorry. So even if the temperature triggers again, they won't be getting an amount after that. So when we spoke to the community people and the the informal workers, they also told us that this was very new for them. They hadn't expected ever that, for heat, like they had heard about medical insurance, life insurance, but for heat, they'll get, some kind of assistance. So in the last year, we saw three such pilots happening. One was MHT that I explained. The other were Vimoseva, and there was one Climate Resilience for All. Now, these were grassroots organizations. Another wonderful example of parametric insurance is Nagaland. I mean, that is the first and the only state till now which has actually covered it in its entire area under parametric insurance. So they have insured themselves against extreme rainfall instead of heat. And their main aim is to protect the state's infrastructure first, and against extreme rainfall, and reduce these economic losses both to the state and to the people.
So in this model, setting a threshold is very important, right? So how is that done currently?
Right. So the foundation for all calculations in arriving at this threshold is the which data you're taking, basically. So that is now the point of contention between the insured and the insurer. So, for example, in Nagaland's case, their first experiment with parametric insurance was in 2021. And during that time, they relied on the data set from NASA. They relied on the NASA satellite data. And during that year, there was an extreme heavy rainfall event, but no payouts came. And that is when, after this bitter experience, they realized that the data, the NASA satellite data was very different. There was a huge difference between that and what IMD's gridded data set was reporting, and also their local weather station in Nagaland. So now, after that experience in the new parametric insurance program, they have gone with the IMD's data set and their own local weather stations. But now this, as a state, they have access to IMD's data set. But for grassroots organization, for example, in Mahila Housing Trust case, they couldn't access IMD's data set because it wasn't available to them free of cost. They went with ERA 5 data set. Now, in the pilot last year, the temperature trigger, according to the ERA 5's data set, was only triggered for Ahmedabad city, and the payouts went to the women who had insured themselves. But if they realized later when they compared IMD's data set and ERA 5, that if they had gone with IMD's data set, and if that was available to them, the temperature thresholds would have been triggered even for Surat and Vadodara, and all 26,000 women who had insured would have gotten the payouts. So these are the challenges now that moving forward, need to be looked at.
So before we close, Akshit, my final question is to you. What is the way forward for the insurance industry?
Yeah, it's a very difficult question to answer, and I don't think there are many experts around the world who would even venture to answer something like that. But what we can do is, one thing is obviously parametric insurance solutions for certain cases, at least for certain events like hurricanes, heat waves. They will be helping us reduce the risk. But there are again challenges in parametric insurance solutions, as Shagun rightly pointed out, the data, which data set to go with, and who is in control of the data, all of that. And then there's also this challenge of communication of risk, right? If the insurance company communicates the risk very well, then they are at a loss. Why will they take a loss for the profit of, they're doing it for profit. Right. So they don't want the insured, the people who are going to buy the policies, to know about the risk properly. So there's this balance that has to be maintained. And when I was talking to the experts while doing the story, also this came up, like maintenance of this balance. And like they said that we need profit. We have to have profit from this. So all these things, exactly. And then what happens is, where the story can go forward from this is bringing in regulatory authorities like IRDAI in India, which is an insurance regulator in India, bringing them in, and then looking at certain cases like heat in Ahmedabad, or hurricanes on the eastern coast, or floods in, say, Bihar or Northeast or somewhere. So look at these use cases and like bring in parametric insurance policies which are national, where the government is also involved, right? And not let in the private insurance companies run amok. Yeah, exactly. Or in fact, bring in also the reinsurance companies. So insurance companies themselves reduce the risk by buying insurance from reinsurance companies. There are big reinsurance companies such as the Munich Re or Swiss Re. So they have to also be taken into account, because they understand risk much better than anybody else, because they are buying up all the risk of all of these people, right, of national governments, of everyone, right? So they understand risk much better. And I spoke to some of the Swiss Re experts, and they said that they're open to it, and they are trying to bring in more transparency into the entire insurance industry. So these things is how I think will perhaps move forward, but it's a very challenging situation.
Thank you so much, Shagun and Akshit. It was a very, you should probably show the Down to Earth cover. And if you would like to read it, you can check out Down to Earth India website, which is downtoearth.org.in. And you can also subscribe and watch the video again to know more. Okay. All right. Thank you so much. Bye-bye.